Hello and welcome. You're watching Countdown right here on Bloomberg Quint Live. We're closing out the week with the markets looking subdued, about 0.2% higher on the benchmark indices, but a fairly flat day of trade right now. Let's take a look at the headlines. Indian markets remain subdued even as small caps and mid-cap stocks outperform. SpiceJet gains nearly 10% in trade today after the airline says it's going to lease 16 aircrafts. TCS and Infosys are trading with moderate gains. The companies will report their earnings post-market hours today. Supreme Court orders political parties to furnish details of all electoral bond donors to Election Commission in sealed covers before the 30th of May. Good afternoon, Neeraj. Last trading day of the week, a bigger move expected come Monday with regards to what TCS and Infosys do.
Yeah. I think, as we spoke about in the morning, Devina, all action post-market hours today and maybe Monday morning. So let's wait and watch. And it's kind of showing in the way the market has behaved as well, right? It may look jagged edges, but just look at the quantum of gains. At this level, we're just about 0.2%. And therefore, you know that we moved in a very tight band of 0.4% either direction throughout the trading day today. That just explains how lackluster the trading action has been in the session today. I don't think that the Nifty Bank too has done something dramatically different. Again, about 0.2% higher, and there too, just about in that range, 0.4, 0.5%, the kind of gains or losses that would have happened. 0.3% maximum either direction. The market breadth should come up on your screen, and the turnover should come up on your screen for a bit. Even Stevens may be slightly in favor of the advances, but this may well change during in the next 1.5 hours and bring up the turnover in today's session. Well, for now, it's very, very low. It will definitely be way lower than what the average F&O volumes are. In all probability, even the cash volumes would be ending up lower than what the averages are. I doubt we could touch 30,000, though you never know what could happen in the course of the day. Bring up the heat map and show you what's happening at the index level. Even Stevens, oil marketing companies led by IOC is down. I don't quite see BPCL. Okay, right here about 0.5%, but nothing too dramatic. Bharti Airtel about 1.5%. Indiabulls Housing Finance corrects a little bit. Bajaj Finance down about 1%. But you know, it could easily have been 1%. There's no specific news out here. And even on the gaining side, some gains for Maruti, some gains for ITC. GAIL is an outlier. Autos by and large seem to be doing okay because I also see a Hero MotoCorp. I see an Eicher Motors out here. So selectively auto stocks. Bajaj Auto is up about 0.7%. So autos seem to be doing okay, but no clear trends either direction. Ahead of the results, both TCS and Infosys lying largely flattish in trade. Devina, what about the broader end of the spectrum?
You need my help in spotting a few stocks?
Yeah, you can do that, not a problem.
No, but yeah, so today's session is fairly flat, not just on the benchmark index. It's also on the mid caps and small caps. And individual stocks, again, are what's going to take center stage. It's not about the index anymore. And that's what we've been gauging from our conversations with our market experts as well, who would rather prefer staying off the indices and then moving on to individual stocks. Starting off with some stocks which are on the move today. Foods and Inns is one stock that you need to watch out for. RK Damani making an entry into and picking up stake in the company. This is a BSE listed stock. It's up 20% since morning. Then you've got a Future Consumers, which has moved up about 4% followed by an Essel Propack, which in the second or third day in a row, the stock has been doing well. Volume buzzers, big strong gains coming in on a stock like PC Jewelers, 13% higher with heavy volumes. Jyoti Labs and Gen Irrigation follow suit. Big volume numbers on all of these names. Near the 52-week high, so you've got a Siemens, which is trading very close to a 52-week high, though today's individually today's move has not done much for the counter. AstraZeneca Pharma, that's up about 3.5% with it being just a few points away from its 52-week highs. And ICICI Lombard, that continuously manages to hold fort at these levels of closer to 1,095. I think its 52-week high is somewhere closer to 1,100, so it's just a few points away from that. Losers in trade, you've got Indiabulls Real Estate that continues to grind lower in the session. It's down about 7%. Edelweiss looks weak. That too has given up some steam, and Radico Khaitan trades under by 4% in intraday trade. Let's take a look now at what happens in the futures and options space. Agam Vakil joins in for that. Agam.
It's a quiet day of trade. There's no doubt about that, given we really haven't seen too much movement as far as the Nifty is concerned. And what we're keeping an eye on as far as your open interest change goes, let's pull that up and take a look at the plate where we see a traction when it comes to the Nifty futures, and that should come up on your screen soon. There you have it. It's about 3.5% increase in OI there. As far as your banking Nifty futures go, well, we're looking at a near 10.7% increase, so a little more accumulation. What we're also keeping an eye on is in the India Volatility Index. Well, it remains at high levels, and we suspect that is going to remain at these levels, considering we are looking at earnings as well as the elections. So it's likely to well, move within a range of 19 and 20, or at least in the near term. In terms of change in OI, we're seeing a little bit of unwinding coming through in the 12,000 call, but in terms of the open interest, it's still the one with the maximum OI. So we're going to watch out for that mark. Of course, on the lower end, it is going to be 11,500. In stocks, we're keeping an eye on ITC. We're seeing a lot of longs here, considering a 12% increase in open interest. After ITC, we also have a lot of traction in something like a CET. Continuing and well, building on the strength that we saw yesterday, so buying coming through there as well. Besides ITC and CET, we are also watching out for IGL. Again, 2% increase in open interest, rather the underlying, so well, fresh longs there as well. And finally, unwinding coming in Diwan Housing Finance. That's been in the F&O ban currently. So that's probably the reason why we are seeing that decline in open interest, but a 3% decline in spot true. So possible longs unwinding coming through here.
All right, Agam, thanks very much for that. That's the F&O wrap out as yet in terms of the intraday moves that we're seeing. Two stocks. Big names in the IT space, and they're going to be watched out closely as they report their numbers post-market hours today. They're going to be kicking start the earnings season. Infosys and TCS. Let's start off with that, and let's bring in Harit Shah to talk a little bit more about his expectations on what these two companies could post. Harit, thanks very much for taking out the time. Let's start off with Infosys and what is the expectations around it, whether or not, we were having a conversation earlier in the morning, and going forward, the expectations, at least in terms of the revenues, is that you will see Infosys having a slight leg up compared to TCS. Is that something that even you are factoring in for the near term for Infosys?
Hello. So I think this quarter we are slightly expecting slightly better growth for Infosys than we are for TCS. More importantly, I think given the very strong deal wins that we've seen for Infosys in the last 1 year, I think they should be able to do have a fairly decent year in FY20. I think the overall revenue outlook appears to be relatively sanguine. I think most important, however, I think the street will probably will be looking more at the margin picture. I think that is something that is likely to be of critical importance for the entire sector, not just for Infosys, given that we are seeing a lot of headwinds in the form of wage inflation because of lack of talent on the digital side, plus rupee appreciation. I think the rupee has turned to some extent, so I think that could be a potentially another headwind that may impact margins for the year. So I think that is another couple of important factors to look out for.
Do you think much of what is expected in terms of the earnings has already been baked into the pricing for both Infosys and TCS?
So I think TCS being a fairly quality name, and the fact that their track record has been one of, without doubt, the best among the top tier pack, in terms of, especially in terms of consistency of organic growth and ability to maintain margins amidst some very volatile economic environments and a lot of cost headwinds. I think that is obviously the reason why it is getting a premium. I think it will continue to command a premium to most of the names in the sector. So I don't necessarily see that as anything unusual about that. But having said that, the stock does trade at 20 times FY21 earnings. So there is very little scope in that sense for any negative surprises right now. So I think that point is taken, that I would say that definitely TCS is a little bit maybe fairly valued at the moment. Infosys, on the other hand, does have some slight upside left. I would right now we would prefer Infosys as our preferred pick over TCS at the moment.
Okay. Harit, the conversation that we had with a couple of people earlier in the last couple of sessions seemed to be that while Accenture is doing what it is doing, that may not quite get replicated for some of the other IT majors, and therefore in the commentary, we may not see the kind of optimism that we saw in the commentary of Accenture. Would you second that thought, or do you have a different opinion there?
Yeah, so I do believe that some part of Accenture's good performance can most definitely be attributed to market share gain for Accenture itself. So therefore, to that extent, it would not be right to directly correlate or extrapolate Accenture's numbers to the entire sector, Indian IT sector. And you should also note that Accenture gets more than 60% of its revenue from the new services, essentially the digital services, okay, like artificial intelligence, cloud services. So whereas Indian IT firms have about half that, get about half of that revenue from the digital space, about 30 to 35%. So it's very clear that Accenture's market share gain also has a lot to do with his very strong presence and his early move advantage on the digital space. So it'll be so, but even then, despite having that being the case, there is enough scope, and just a couple of days back, ISG had held its quarterly conference call, and they clearly have given out a fairly optimistic outlook on the digital side of things. I think 25-30% growth is what they're seeing for the digital contract value. So I think there is enough scope right now, even for Indian IT firms, to grow as digital goes up from 30% to maybe 45-50% of revenue. That will definitely move the needle more meaningfully for revenue growth. So to answer the question in short, yes, part of it, part of Accenture's numbers can be attributed to market share gains, but certainly one part of it can also be concluded that it is good for the Indian IT sector as well.
Harit, the other question is that aside of the headline numbers and the most important monitorable, so Agam tells us that for Infosys, what they speak about in terms of the margin delivery for Q1 as well as for the year ahead, and in the case of TCS, what's the total contract value that they do, because in Q4 last year it was such a large number. So these are the big chunks. What else is something that you would watch very, very closely, which could impact the revenue or the margin or the profit trajectory depending on what they comment on?
So yeah, I think for both firms, the important, very critical thing is of course BFSI and retail. These two verticals account for almost 50% of their revenue, and performance in these verticals is definitely going to have an impact across for the entire company. So commentary on these two verticals is I think going to be of paramount importance. I'd mentioned earlier about the margin profile, so that is something that not just these Infy and TCS, the entire industry will get impacted by. So, and of course, especially we'll see what Infosys and TCS guides for, and what would Infosys's margin band be. So right now 22 to 24% is their band. If they're able to maintain the margin band, then that would send a fairly positive signal to the street. And I think another important thing is to look at is attrition rate. So for Infosys especially, we've seen attrition rate being spiking quite a bit over a while now. So it is very critical to get that under control to ensure that delivery does not suffer. So these are, I think, some of the critical data points you would typically watch out for today.
Okay. Harit, before we let you go, while we've spoken about Infosys and TCS, for the rest of the IT pocket, we're also going to closely watch out for what HCL does, what Tech Mahindra does, and even the mid-cap IT pocket. Do you expect any surprises from that segment, particularly mid-caps?
So I think at the moment, from the mid-cap side of things, we like Sonata Software. I think they should do fairly well. They've been doing well for the last few quarters now, and this quarter they'll also have an acquisition impact. So that's a fairly small cap company, a very interesting kind of a niche IT firm. So I think that is one one company to whose results we would look at fairly closely. There could be some positive potential on that front.
Okay. Just in order of your liking and your preference with regards to the large caps, if you could give me your pecking order.
Yeah, so we like Infosys and HCL Tech as our preferred picks at the moment. Tech Mahindra has some valuation support out there. So I think these are three preferred picks. TCS we would prefer to wait for a small for a bit of a correction before we would turn constructive on that stock.
All right, we leave it at that, Harit. Thanks so very much for joining us this afternoon. That's a quick take on what is expected out of Infosys and TCS come Q4. We'll have to wait and watch what they report. The reactions to the stock price ahead of numbers is not all that much. They're absolutely flat. But remember, IT as a pocket in the run-up to these last few days has been fairly resilient. So this is a space over the last few days. Even in the mid-cap space, a few stocks have done relatively okay. Yeah,
these two have been... So they're right, the last 1 month, I think they've had a good run. The last 6-7 days, though, both Infosys and TCS, near about flat returns. It'll be interesting to see what they do post their earnings commentary in the session, or in the session on Monday. Okay, let's move on to corporate conversations. And Essel Propack is a stock in focus. The case for a chat for getting the company today. They've gotten about 96 crores of repayment towards the intercorporate deposit. In times like these, maybe, just maybe, these are important things, and maybe that's what got the stock excited. It was about 6% yesterday, 4.5% today. Let's get in Mr. Ashok Goel. He's the Chairman and Managing Director, to talk about that. Mr. Goel, good having you. Thanks for joining in. How important is this? Was it stuck in a problematic situation or otherwise? And what would Essel Propack as a company use this money for? It's a reasonably large sum, but not so large for a company of your size as well.
Yeah, thank you, Neeraj. You know, I had only one item with respect to corporate governance that I was not complying with, and I was facing this question for a long time from investors and analysts. And from that perspective, and from the corporate governance perspective, this is an important event. And therefore, yes, this amount was long overdue, of 96 crore, the only item, and that has been received. And so therefore, that related party, anything that Essel Propack had has been cleaned. So from that perspective, it assumes importance.
Okay, so Mr. Goel, what's transpired? I mean, this whole amount has come back to you, I presume, so that takes care of what you said was the only question on you on corporate governance issues. And would you be also be able to tell us whether you will use this money to reduce debt or some other purposes, or will it be mixed use?
Yes, Neeraj, we've already reduced our debt by that amount. So, it is safe to say that we have reduced our debt by 100 crore rupees, which brings down the net debt to about 550 crores. And as we go along, it will keep reducing further.
Mr. Goel, good afternoon to you. This 96 crores in terms of intercorporate deposit repayment that you've got, that is all the sum that there is? So there is something more that you can anticipate in the near future that comes back as a repayment?
Ma'am, there's nothing else due, nothing else was ever given to anybody, except that the interest of the last year, which of course this 96 crore came in tranches. So therefore the interest component of about 9 crore is due, which we will have to figure out how we settle that.
Okay, and that's not a big amount, so it's not a big worry as such. Right. The other part is, Mr. Goel, you said you're using this money to bring down debt, and you've already brought it down to about 550 odd crores. Is there a plan to reduce it further from these levels?
Yes, as we have been over last few years have been generally reducing our debt, and that will continue to happen through internal accruals. Yes, even in spite of the fact that we continue to do capital expenditure equal to our depreciation. So yes, the debt is being reduced and will continue to reduce.
Would you have a debt reduction target in place?
No, frankly speaking, our debt ratio, coverage ratio, interest coverage ratio all kinds of ratios that is used by the financial world is very, very healthy. Our ratings are very healthy, so there is no target as such, but whatever extra cash that we are generating, we are using that to reduce the debts.
Mr. Goyal, I know you won't be able to talk specific numbers because you must be in a silent period, but just a broad brush outlook. This is one final question from my end. Everybody around the world is talking about a slowdown. I'm guessing it impacts almost every participant. Now, you would be in the essential chain in the sense that these are the products that you, or the companies that you work for are your clients, are manufacturing essentials, and therefore they'll be the last ones to get impacted. But do you sense that it could come out and hurt businesses like yours as well? And how severe could the impact be? What are the conversations with clients suggesting?
Neeraj, your question is, I guess, is specifically to India, but remember that Essel Propack's 65% of revenue comes.
Mr. Goyal, excuse me. No, actually, my question was more from a global perspective because I know that you are such a large global player. If IMF and everybody is talking about the world slowing down, even though India's prospects might look good, I was more intrigued from that front.
Okay, so great. So that gives me clarity. From global perspective, as far as Essel Propack is concerned, Neeraj, we are growing quite nicely across all geographies. As we speak, we are winning new businesses. We are delivering higher sales in rest of the world. What so far has worried me is India, and therefore I thought you were talking about India. But generally speaking, Essel Propack's growth story is not linked with economic growth at all, because we are talking about replacement of existing formats of packaging to laminated tubes. That's what we are doing, and therefore our growth, we are not really worried if there is a concern around economic slowdown globally. What did worry me was India's numbers last quarter, and that we need to see how India's demand comes back up. Otherwise, I'm so confident that we are winning business constantly across the geographies, and we will have a much faster growth going forward.
Particularly within Europe, and obviously, you had good growth last quarter, I think 22% growth coming in from Europe. I just want to get a sense from you in terms of whether this growth trajectory can continue, and have you seen the pace of translating conversations into more commercial orders from Europe? Has it happened at a faster pace?
Yes, you're right. Europe has been growing fast, and I reckon, based on my discussion with the European teams, we have constant reviews. We are actually going to pick up the pace of growth in Europe. Now, I'm not sure what do you mean by promotional events, but if you're talking about the FMCG products doing promotions, that may well be, but our growth is again not specific linked to the specific events that the brands might do. Generally speaking, for Essel Propack, we are winning more business, we are winning more market share. We are transforming the other format of packaging to laminated tube. There are multiple projects going on. As we speak, the first capex in this financial year that we will have is also in Europe, all to expand the capacity.
All right. I don't know whether you'll be able to give us that number in terms of what capex you're talking about, Mr. Goyal.
It will be in tranches, because we have a modular expansions, because our equipments are modular. Therefore, it doesn't come in one big shot. But to begin with, I think we are talking about $5 million immediately in Europe.
Okay, got that. Mr. Goyal, thanks very much for joining us. Really appreciate you taking out the time and speaking to us. That's the management at Essel Propack talking about business and the repayment of their intercorporate deposit of 96 crores, and nothing else that's left for them to get in the form of a repayment. The stock the last 2 days has done well. Today is up 4%. Yesterday was up another 6% odd. Moving on, SpiceJet is looking to lease another 16 aircrafts after it was forced to ground its Boeing 737 MAX planes. The airline claims it will be able to fly on all routes once these planes have been registered in India. Samit Sarkar is joining us with more. Samit.
So if you see, SpiceJet has come out with this announcement where they're saying that they have inducted nearly 16 new aircraft from the secondary market on lease. Now they are waiting for the approvals to come in, but they're expecting these planes to be added to their fleet in the next 10 days. Now these new inductions will support SpiceJet's international and domestic expansion plans. So earlier, if you remember, SpiceJet had to ground nearly 8 aircraft due to the issues related to the 737 MAX. So these inductions come in as a positive for the company. Now for the summer schedule, at least if you see the domestic capacity of SpiceJet is expected to increase by nearly 30%, and these new inductions will assure that the company has been able to maintain this kind of growth rate for the summer schedule at least. Now there's a high possibility that the lease rentals for this aircraft would be lower for SpiceJet, and that is because of the excess unused capacity available in the secondary market because of the groundings of Jet Airways. Now Jet Airways has grounded more than 1/5 of its total fleet at the start of the year, and that's the reason there's a lot of unused excess capacity that is available in the secondary lease market, and that's the reason SpiceJet could have got these aircraft at a lower lease rental. So that plus the assured growth rate of 30% in the domestic market, and we are seeing a positive move in the share prices of the SpiceJet today. It's up close to 9 or 10 odd percent. Yesterday also the move was around 6 odd percent, and that's on the back of this growth rate and the possibility that the company might have got this aircraft at a lower rentals.
Okay, that SpiceJet was extremely active right now, 8% higher on volumes of 8.72 million shares. Samit, while you're with us, tell us about Morgan Stanley's note on Avenue Supermarts. They don't seem to be too optimistic on its prospects.
Well, yes, not at all. They are optimistic about Avenue Supermarts as they have initiated and rate coverage on the stock with an underweight rating and a target price of 1,120. Now, according to the brokerage, Avenue Supermarts has a solid business. It is one of the most efficient retailer globally, generating a higher revenue per square foot when compared to Walmart. But the retail landscape, if you see, that is changing according to the brokerage, which will have implications on the revenue growth, which has still not been factored in the valuations of Avenue Supermarts, says the brokerage. Now with rising competition and expanding scope of the retail business, there could be some implications of the revenue growth and on the operating margin front for the company, says Morgan Stanley. Now along with this, the rising competition will also pose a big risk for the company's same store sales growth, and it may also blunt DMart's first move advantage when it comes to the lower pricing move that they have. Now currently, if you see, according to the brokerage, the market is factoring in nearly 30% earnings growth rate for DMart for the next 10 years, but Morgan Stanley is expecting the company's earnings to grow at a CAGR of only 24% over the next 10 years. Now the brokerage also has a bull case target price of 1,850, where it is expecting strong same-store sales growth trend from the company combined with a strong expansion plan of the company. Well, it also has a bear case target price of around 700, where it is expecting the other way around, that is a slower same-store sales growth and a slow pace of store expansion for the company.
All right. Samit, thanks very much for that. So those are two stocks that we just highlighted. That's SpiceJet and Avenue Supermarts. The other one is another brokerage note that's coming in on Axis Bank. UBS has raised its target price to 1,010 from 780 rupees. Shefali Malik, she's joining in with more details and the rationale behind this upping of the target price. Shefali.
In last 1 month or so, we've seen a couple of upgrades come in for Axis Bank in terms of its target price. This comes especially after the management met with the analyst. So UBS is the latest one to upgrade the stock. They're keeping the rating as buy, and target price, they've raised it to about 1,010 from about 780 rupees a piece earlier. And in this note, they're actually comparing it to HDFC Bank, whether this particular stock, Axis Bank, has the potential to become a next HDFC Bank. So they're saying that it's well placed to generate best-in-class return ratios. It's also well placed to gain market share through major transformation under the new management. And they're saying that we can expect growth in profit differential with HDFC Bank to narrow over FY19 to 22. They're also saying that favorable loan mix gained from its physical and digital network is something that is going to drive growth for them from here on. They're forecasting a pre-provisioning operating profit growth of about 25% 6% over FY19 to 22. They're saying that the stock does have the potential to re-rate to about 3 times price to book value if it reduces its risk profile over next 2 to 3 years. So that will be one key monitorable that they will be looking forward to over the next 3 years or so. And the stock has a potential to double in 3 years as the multiples re-rate. So that's what UBS is saying in its note on Axis Bank.
Right, Shefali, thanks a lot for that. So indeed an upgrade coming in there, and a meaningful one at that, from 780 rupees to 1,010. So that's a big move. Let's talk a little bit more, and as normal, we generally take a look at what mutual funds have bought and sold on a monthly basis. This time around, we're covering ICICI Prudential Mutual Fund, and Nikki Burchadani, she's joining in to tell us what have been the changes for the fund in this month. Nikki.
Hi, Devina. Essentially, ICICI Prudential AMC has been buying thematically, if you see, communication and financials, and selling into utilities and energy. The top 3 positions, or the increase or decrease for the month of March, if you see, the first one to feature on the list is Vodafone Idea, where the AMC has bought in 6 crore shares. And what the stock typically has done so far, it's actually fetched a negative return of around 29%. But then the Bloomberg consensus, if you go by that, it suggests a potential upside of more than 20% for this counter. NBCC is the second change that we've seen in ICICI Prudential AMC. It has picked up 1 crore shares additionally, and so far what the stock has done, it's fetched a positive return of around 8% YTD basis, and the Bloomberg consensus potential upside indicates an upside of around 9% for NBCC. SBI Life Insurance is next in the list, where AMC has bought in 1 crore shares, and the stock so far has returned a meager return of around 4%, but has a potential upside of around 22% as per the Bloomberg consensus. What we have in terms of the decline in the portfolio of this AMC, BHEL, where it has sold in more than 3 crore shares. YTD returns is 1%. Potential upside is actually negative or 12%. Clearly explains why it's declining. It's rather decreasing the position in this counter. ITC is next in the list, where it has sold in more than 3 crore shares. The stock, what has done, YTD basis 5% returns, but then the potential upside is more than 10% on this counter. And Power Grid and Corporation is the last in the AMC list out here, where it's sold in more than 3 crore shares. What stock so far has done on YTD basis, fetched a negative return of around 2%, but then the analyst, the Bloomberg consensus analyst, suggests a potential upside of more than 15% for a Power Grid Corporation. Back to you guys.
All right, Nikki, thanks very much for that. That is some changes in ICICI Prudential Mutual Fund in the month of March. Let's bring in Amar Singh of Angel Broking. He's joining us on the show right now. Amar, thanks very much for taking out the time. Nothing much is happening on the index. It's in a pretty tight range over the last few trading days. Looks slightly fatigued. What's your sense and whether or not it's probably more prudent to not take a trade on the index and rather look at specific stocks in that case?
Yeah, I would say that we had buy calls in the index early in the morning. So it has bounced back. So what we are seeing technically on the daily charts is that index, you're right that it seems fatigued, and on the upside 11,750, 760, which was the all-time high, 11,761. So clearly that is a top which the market is respecting, and specifically we'll have to look out the financials, banks, how HDFC, Reliance and Bank Nifty performs, because that's going to actually drive the markets. And what I would say is that we are witnessing some profit booking, and as far as Nifty is concerned, first talking about Nifty, we find that it's got very strong support coming around 11,550, 560 zone, because that's from where it's been bouncing back. And today also the recovery has been comparatively, I would say, from almost 100 points from the lows since yesterday. But sustaining above 11,000, I would say 670, 680 to start with, that is something which is very important. As far as Bank Nifty is concerned, I would say Bank Nifty is also, see what's happening technically on the charts, short-term charts, is that there is a loss of momentum. There's no doubt if you look at Bank Nifty or Nifty, for the last almost 12 to 14 trading sessions, 10 to 12 trading sessions, there has been a gradual decline, but again, lower levels are being bought into. So looking at Bank Nifty as well, somewhere around 29,550, 600, that's acting as a crucial support zone. Whereas on the upside, if you look at it, somewhere around 30,150, 30,000, at this I'm talking about the spot, 30,150, 30,250. So it's got in a narrow range. But looking at the weekly charts or the monthly charts, they clearly show that the trend remains positive and up. But yes, we are seeing some choppy trading sessions.
Okay. Let's talk stocks then, but before that, I'll just quickly introduce Rahul Shah of Motilal Oswal, who's also joining us on the show. I'll come to you on your calls, but I just want to go back to Amar and get his stock calls. Bajaj Finance, HDFC Bank. Amar.
Yeah, that's correct. Looking at Bajaj Finance, what we are seeing in Bajaj Finance is that the stock has corrected marginally from a high of 3130, and today also it's corrected marginally, but these are good levels to buy because if you look at the charts technically from a long-term and an intermediate-term trend, even from a short-term perspective, I would say that the trend remains positive. Yes, short-term we are witnessing some consolidation in Bajaj Finance, but there's a possibility that we could see an upside. So Bajaj Finance is a buy in the range of 3030, 3040 with a stop loss of 2941 and a target of 3188 on the upside. And the second stock to look at is HDFC Bank. Because if we look at HDFC Bank continues to remain strong on the long-term charts as well as the short-term charts. Even on the daily charts, it's moved from oversold territory and making a recent low of 2231, it's bounced back. And however, on the upper side, we are seeing it consolidating, but again, the trend remaining positive. So any dip should be used as a buying opportunity till the time we don't see a break, significant break. So I would say that HDFC Bank anywhere between 2250, 2255, that's a good level to buy with a stop loss of 2221 and a target of 2310 on the upside.
Rahul Shah of Motilal Oswal with us as well. Rahul, good afternoon. Thanks much for joining in. What's your stance, Rahul? We are right now trading at the highest point of the day, but otherwise has been a fairly narrow band. Next week, truncated week as well, plus the IT earnings coming out this evening. Are you taking a bet on the index currently?
Hi, good afternoon. I think, yes, I think the markets have been choppy since last 3-4 sessions, and I think it would likely to remain in a narrow range, I think. So we've seen that on in a couple of odd days that one day we'll see markets moving up and next day giving off that gains. So it would be in a very narrow range, and looking at the indices in terms of Nifty, I still feel that around, I think another 100 points or odds can be taken from it on the upward side, and then it could take a breather again and we could see some sideways moment. So right now, if you look at on a Nifty front, I feel that major large cap movers are still showing a good sign on a good strength on the index. So I think those stocks will continue to do well, and it's unless like few days back we had only a participation from the BankX, and now the rally has been participated from a broader perspective. So my view is that I think the Nifty can test around 11,750 or so, and there it can take a breather or so. So I would go long on Nifty with participating Nifty by buying a call options of 11,700.
Okay, and what are the stocks that Rahul you are recommending in the session today?
I think the sector one remains very attractive is obviously the banks. So in corporate banks, I think we've been liking ICICI Bank. So I feel that ICICI Bank has a good longs built up also from the current levels and a good support at 384, 385 levels. So with stop loss of 386, I would go long on ICICI Bank with a target of 415.
Okay. Now just one follow-up question. What's the conversation in the house on Maruti Suzuki? That stock has come back very, very strongly the last few days, more up days than down days, and not showing any signs of breaking down fundamentally and technically. Are you telling clients to log on into Maruti Suzuki?
Neeraj, interestingly, if you look at post-monthly numbers of the month of March, we've seen good numbers, and on back of it that we've seen the re-rating in Maruti, and stock was under-owned, and I think most of the entire auto as a pack was under-owned. So in that, I think Maruti obviously was overdone in terms of the way that stock has been performing. So I think post that we've seen the re-rating, and we've seen back the investors coming back at a lower levels and a strong support in terms. So I think that is one thing. Secondly, I think technically, I think above 7150, obviously stock has given a fresh breakout, and I think it's broken the narrow range of that 6750 band to 7200. So I think its stock can still go higher from another 3-4% is taken from current levels.
Ashish Maheshwari of Arihant Capital Markets also joining us on the show. Ashish, good afternoon. What's the stance that you guys are taking on Jet Airways? It's a it's a stock in a state of flux because the company is also in a state of flux of sorts. Today is a D days too. What would you advise your clients to do?
We are still advising our clients to stay away from Jet Airways. Again, in my view, till the time there is some certainty who is going to be the next owner of Jet Airways, I think volatility will be there in the stock, and the stock will move in very narrow range. Instead of this, we are even more comfortable with a stock like SpiceJet and Indigo also in the same space, because they are the ones like who are going to get maximum mileage and maximum revenue share, whatever Jet Airways is going to lose. So Jet Airways in our advisory view is still an avoid call, and we'll only like to check in once ownership issues is sorted out.
There is strength in some of the FMCG names today. What's the call on ITC fundamentally? Ashish?
Yes, in fact, ITC after a very lackluster year again has started showing some momentum, and in fact, it's not only ITC. We see HUL and some of the leading stocks like Marico, etc. They are also started showing some traction, and in my view, this will continue because their Q4 results are going to beat the street expectations. First of all, with the expectation was not that great from FMCG side, but they have done reasonably well. Their raw material prices is also quite under control. At the same time, new launches and price hike what ITC have taken in recent past, I think all are going to take a stock in new trajectory. So ITC per se, I am very bullish in my view, as this stock has reached 300 mark, which was very strong resistance for a long time. I think time has come to look at ITC for short to medium run.
Stock though is up about 3% odd. Remember, this is a stock which actually is a sloth of sorts within the FMCG pack as a whole. Nonetheless, ever since this rally started off in February 2016 till now, I think ITC has just gained about 34%, while its other peer, HUL, that's been up closer to 130% in this entire up move that we've seen starting Feb 2016. More about individual stocks, and today's session yet again sees Indiabulls Real Estate taking a knock. The stock has been down yesterday, the day before that, and once again some profit taking off the table after that big move that we saw. Stock's down 5.5%. Rahul, what would you do with Indiabulls Real Estate? And the likes of even Godrej Properties, if you comment on that, because that one has also seen a sharp run up.
I think if you compare both of the stocks, I think Godrej Properties have been in a clear winner, and it's almost near to its 52-week high, and the way the stock has performed. My view is that I think Godrej Properties still can do well. So an entire realty pack, I think this is a clear winner in near term. So my view is that unless it breaks 885 or so, till then I think one should continue to hold on, and I think again it can test 960 or odd levels. So I think I will remain bullish on Godrej Properties. And adding to the realty pack, I think DLF is another one stock I think one should look at. I think the stock has made a base at around 177 or odd levels yesterday. So I think with strict stop loss of 178, one can look at buying DLF also. I think the stock can again go to 192, 193 levels.
A stock which has been on a run the last 8 days is Grain Industries. So up about 12.5% today. Look at the 7-day gains, 24% for Grain Industries. It's been one spectacular mover the last few days. Amar Singh, did you anticipate this? And after this move has happened, what now?
No, actually, if you look at the charts, there was some, I would say, bullish divergence on the charts. That was definitely there, and the weekly charts were also positive for this. But today's move is definitely, that's something unexpected. But looking at it technically, I would say that it has got some strong resistance coming slightly above towards 126, 127 levels. So ideally, those who are long, they should look at booking profits, because that's one level where the stock is likely to meet with resistance, because that was the earlier top also in January, from where it had corrected all the way back. So 126 to 128 zone is a crucial resistance zone. taking that out, closing above that level, then the stock is definitely poised for higher levels towards 150, 155 levels. But for that, it needs to consistently sustain, close, and stay above 128 levels.
Okay, 13.5% higher in the session today is Rain Industries. Really good going, along with PC Jewelers. That's the other one which has had a great run over the last 7 days, and in today's session too, up about 15%. So 3 or 4 names have done rather well for themselves. Ashish, do you guys have coverage on Essel Propack?
Not very active coverage as such on Essel Propack we have right now, because stock is not doing that great for quite some time now. Any specific thing you wish to ask, Nikunj?
No, not really. I mean, the stock has done really well. We interviewed the management. They're just wondering if this 95 crore intercorporate deposit moving out, is it meaningful for some more gains for Essel Propack?
No, I think these corporate governance issues are quite some time now, and this once this ICD payments etc. is done, this may be only a short-term trigger, but in long run, again, their fundamentals of the company looks quite static. If you see their last 1 year quarterly result performance also, I haven't seen any great numbers coming out of Essel Propack, and only on account of the tough competition now they are having with other peers who have also expanded their capacity in the same line of activity. So on packaging stocks per se, I'm not that bullish. Even if we have seen the performance of Uflex, etc. also, stocks are not going anywhere. In fact, one stock which I'll be keen in the sector will be Polyplex. Though stock is having less liquidity, but fundamentally it is one of the best managed company, as well as whatever the expansion company have recently done will start yielding results. So I am expecting very good numbers from Polyplex for this quarter. So instead of Essel Propack, if in packaging call need to be taken, I think Polyplex will be a better bet.
Okay. We'll leave it at that. Ashish, thanks so much for taking the time out and being with us. Really appreciate you joining us and giving us your thoughts and your recommendation too, Polyplex. That's something that maybe investors can watch out for. Okay, now focus on Foods and Inns Limited. That stock is in focus today because Radhakishan Damani's Dirav Investments bought a 4.7% stake in the company. It's a small investment, but by a marquee investors company, and that's why the stock has been very active today, up about 20%. Let's get in the management to know more about this company. What do they do? What is the outlook like? Amar Dupelia, who is the Chief Financial Officer of the company, joins us right now on the phone line. Amar, good having you. Thanks much for joining in. Can you tell us what is Foods and Inns all about? We know that, I mean, whatever I know or whatever you know is that you are an exporter of processed tropical fruits, purees and vegetables. Is that the nature of the business, or do you do something else as well?
Yes, that's precisely it. But effectively, we consider ourselves as a premium processor of fruits and vegetables in India. So we have access to a lot of farmers, as well as we have a lot of infrastructure and factories in place to process a wide range of fruits and vegetables around the country, mostly mangoes, guavas, papayas, as well as we do a bit of frozen snacks as well for the export market for the ethnic Indians outside of India. So we're largely involved in B2B food processing.
Is your revenue and your income mainly from the export market? Which segment is your business primarily from?
I would say primarily it's exports. Historically, since 1970, we've been focusing on exports, and we only started in the domestic market post-2007. As a split, we're about 65 to 70% export, and the balance 30% is domestic, which is the area that we're seeing scale up over the last couple of years, with the consumption story really playing through for us. And the local companies picking up more volumes, having more fresh food products, fresh juices in the market. So all of the pulps and purees that go into those products primarily come from us.
So what has historical growth been for Foods and Inns from the export market? And since you come into the domestic market in 2007, how has growth been in that duration? And what is going to lead growth going forward for you year on?
Well, so the first part of the question, we were 100% export till 2007. So between 2007 and 2019, we have been in the domestic play, for which today we have 30% of our overall sales in the domestic market. And I think going forward, there's huge potential in India. I myself come from more of a financial service background, but I've kind of transitioned into the food space in India. And there's immense opportunity. The way I look at it is India's pretty forward-thinking in food processing. The government coming through has a lot of support, not just for processors, but for farmers as well. I also think it has the most potential to scale up in the future. We are getting lots of volumes that are coming through, as I said, in the domestic play, and that is supported by domestic consumption. And I would say that millennials are really kicking in. There's less time on their hands. There's more consumption. I mean, the median age of India is 31. It's going to be 31 till 2030. So the opportunity is there. I also think we're moving from a largely unorganized play to an organized play in the food sector. And this is supported by GST, demonetization, extremely helpful in our space. Obviously, we deal with a lot of farmers, so that really brings transparency to the system. And I also think we have a lot of younger players coming into the space, which is excellent. I mean, we have these Indians living abroad who are coming back and have a lot of startups. We support a lot of startups in India. We might seem like a big B2B player, but I'm spending a lot of my time personally supporting the younger guys who have the most potential to scale in the future. So I consider them as the young leaders and as someone who will be adding value to the industry going forward. So that's how I see it really move going ahead in the future.
Amaya, would the nature of the business remain B2B, or is there any plan to be B2C as well?
We have considered that. All our experience, our expertise sits in B2B. However, we are looking at a B2C play, as well as we're looking at some potentially inorganic growth maybe in the future as well, and see how we can capture that to get a play in the B2C space. But it's expensive the way we look at it. We have to set, it's almost an unlimited budget. And we're kind of working our way through to set us up in that frame, as well as getting the right people on board. Because primarily we are B2B, as I mentioned. And to get into B2C, we want to make sure we have the right plans in place to really amplify our growth in that space.
So what's the story like, Amaya? I mean, what do you do from here on? You might consider B2C, but you're not 100% sure. As I see, you have 4 or 5 manufacturing units as well. You are into exports, you are into domestics. How do you explain what food and inns would be 5 years from now compared to what it is right now?
So our plan going forward, and we set these business strategies in place, for a 5-year period, and keep revisiting it on a yearly basis, and we discuss it with our board. But it's very pointed. It's not very expansive, but we focus on a couple of key things, such as keeping our factories going through the year. We are currently working at close to anywhere between 40 to 60% utilization. So we want to try and increase that as much as possible. That covers our fixed overhead costs. We're also looking at new product development. So we're looking at more value additive products. So things like butternut squashes, avocados, beetroot. The volumes might be small, but there is a market in there who appreciate more value additive products. Again, we have to build those farmer relations to get direct access to that. Another challenge for us is really pesticide management, because Indian farmers are not very well aware on that space, and we're training them to use the right pesticides because consumers are becoming aware, and because we deal in export markets, we're very well versed with that. So we're really focusing on that's what I call value in the food space, is managing the pesticides, managing the traceability, and also doing something new, as well as really maximizing our asset utilization. We had a lot of capex in the past. We see that capex unwinding over the next couple of years, and then really bringing us value in terms of top line as well as bottom line. And I think the last point is just being more frugal. And I think that's what everyone in business needs to be doing, especially in India, is we're trying to do more with less. We're trying to find opportunities in adversity, and most of all, just keeping it simple. We're not spending a lot of money on something too fancy and going into really complex technologies. As much as I hear about that and through my travels in Europe, we're just trying to keep it simple, but mostly focus on a balance between our top line and bottom line growth, as well as take advantage of the macro.
It's all also about growth potential. What has the average growth for the company been like on a year-on-year basis, be it revenues, be it volumes, and is that something that you look to change for the better in a big way, or is that something you hope to maintain?
No, absolutely. I think for us, we're seeing our volumes growth quite significantly year-on-year, and for us, that's anywhere between 10 and 20%, because there are a lot of other players in the market. We've seen a lot of farmers turning into processors lately. But again, it's a cash flow generation. It's a cash flow business. So a lot of people come in and then slowly move out as well. The Foods and has been there for 45 years. I mean, we're the only listed food processor in the market. So we have a lot of access to the backward. So we're growing on our volumes, and that's really our focus. With the revenue, we really can't say because it depends on the fruit price. So it's a mixture of volume as well as fruit price. If the fruit prices are low, I might do more tonnage. But if the prices are low, then my revenue, my realization will be lower. So I wouldn't comment on revenue. Definitely the idea is to scale it and grow, and I'm sure it will with the way we're seeing growth in the domestic market. But our focus is mostly on the tonnage volume and pushing that number up, at least 12 to 20% year-on-year.
Are you seeing any hindrances or challenges in the current landscape of the market? We've been seeing a few others within the industry that have faced volume growth challenges. Do you think you will face the same?
I think our only challenge is cash flow management, to be honest, as well as working with farmers, working with traders. Those are our two biggest challenges. From a cash flow perspective, this business is not really measured on top line and bottom line, according to me. It's measured on how well you can generate your cash. How are you matching your inflows and outflows on a daily basis? My only objective is to be in a positive net cash flow position every single day. My conversations with my customers are more around how can I change my payment terms? How can I work towards better payment terms? And how can you take your shipments a lot faster than you do before? Because that helps me get the money in the company, pay off my loans, reduce my interest. So it's all about cash flow management. That's the real challenge we're facing, but we've got a good team in place to really tackle that. Along with that, as I said, the challenge and the hindrances are also on the farmer side, and the lack of awareness, really, the lack of training. I think the farmers are really driven by making money as soon as possible. We are looking at more organic ways of growth with them. We are working on we're working with a lot of farmer communities, training them on pesticide usage, training them on sustainable farming. India might not pay a premium for this at this point, but I think our foreign markets are paying a premium for sustainable material. But to train them, it's a process. It's easy to sit in an AC office in Bombay and talk about it, but it's about going down there in the farm, sitting with them, understanding their challenges, and really showing them the value that if you do use natural pesticides instead of chemical pesticides, there's not just a benefit to you in terms of price, but also to the end consumer.
So my last question to you now remains with regards to your market share. What do you own of the market currently? What's your market share? And do you expect to increase that meaningfully?
Well, at this point, the promoters have 45% of the market share. Overall, it's been maintained that way in the past. We have infused some capital over the years in the past, mostly because we've been working with a lot of consortium bankers, and they have obviously requested us to infuse some more capital. Of course, we have a low capital base. That's the plan as of now in terms of the shareholding per se, and the rest of it is
Amar, if I can come in, we wanted to know what's your market share currently in the organized processing market. How much does Foods and Inns command?
I would say we have a healthy, between 25 and 30%. So we are one of the major players in the market. We are one of the larger processors. We have blue chip customers all across the world, not just in India. We control about 25 to 30% of the overall processed fruit and vegetable market.
You're talking about the world market share, really? 25%?
No, this is India.
India, yeah, that's all. Yeah, okay. Yeah. One more question. This 15-20% growth rate that you mentioned you aim to achieve. One, would you need to set up any other processing plants for the same aside of the 4 or 5 that you have? And two, would you need to raise any money for the same?
In terms of additional capacity, as I mentioned, we already are not at optimal capacity.
Okay, so you don't need to do that.
But we will be trying to expand on that. So not really in terms of capacity, although we are thinking of building some more infrastructure to support more value-additive processing. And in terms of funds, yes, we are already working with the banks in order to get a line of credit for that expansion in terms of tonnage.
Would you from 344 crores, my last question on this interaction, FY18 revenues 344 crores, would you have ended FY19 with that ballpark 15-20% growth rate?
So you're talking about FY20?
No, FY19, the year gone by. Do you think you've done about a 15% growth rate over FY18?
That I can't comment on right now. So we're yet working through our numbers. But yeah,
not an exact number, but ballpark. You think you've kind of...
I would say it's largely in line with last year with some growth, but I wouldn't say exactly 10 to 12%, no.
Okay.
All right, we'll leave it at that. Thank you so very much for joining us on this conversation. Getting a deeper insight into the business of foods and inns, what they do, what the growth potential is likely to be. And the reason for having this conversation is that marquee investor RK Damani has picked up via Derive Investments a 4.7% stake in the company. Stock reaction, as you can see on your screens, is up 20%. We're going to take a very short break right here on Countdown. On the other side, we will get you the Fab 4 stocks of the day at 3:15. We will tell you what dealing rooms are talking about and also get you some closing strategies.
What is the meaning of this word suspense? Suspense is something very intangible. Say we show somebody getting killed. For me, I'm not interested in a whodunit. The moment the audience knows that this person has done it, and he has to ensure that he doesn't get caught, there is a certain tension in that. I try to give away as much as possible to the audience and still keep enough aces up your sleeve. I don't think any director would be able to say, okay, this is my style. I don't think I can define it.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
Better?
Same.
Now?
Abhi? I think so.
Sometimes we can't see what's right in front of us. And when it's clear, then the big picture becomes fuzzy.
Perfect.
The right lens always is.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
welcome back. 25 minutes left to go for market closing. We're going to shut shop this week on a slightly flattish note, but today's session is turning out to be an interesting one. Towards the last half an hour, 45 minutes of trade, it looks like the markets have picked up, and for the indices, we're now crossed 11,650. The banks are also doing okay, just about nudging 30,000 yet again. Let's find out. We'll talk about all of the internals in just a bit, but let's bring in Yash Upadhyay right now and find out what has made it to his list of the Fab 4 stocks this afternoon. Yash.
Good afternoon, Devina. I'll start first with Dilip Buildcon, and that one is up in trade today about 3.5% on the back of the report that has come in from Bobcap, which has initiated coverage and has given a buy rating on the counter. Now they have set a target price of about 750 rupees, which indicates a potential upside of more than 20% from its current market price. SpiceJet is up 9% on the back of reports that the company will be inducting 16 new Boeing 737 aircrafts into its fleet. Watch out for Gillette as well. It's not the most liquid counter, but it has seen a big move in today's day of trade, up about 5% and with this it has managed to hit a fresh lifetime high as well. Lastly, watch out for TV18, up 10% right now, with some high open interest build-up of more than 15% coming into the counter. Call options have seen a big surge, almost tripling over its previous trade. Watch out for that.
All right, thanks a lot for that, Yash. So keep an eye out on all of those stocks. On to our next segment. Mining ban and a shutdown hurt the country's largest iron ore miner hard. NMDC not only missed its target, but its overall production has come in at a multi-year low. Nikki Mirchadani, she's here with more details on our chart of the day segment. Nikki.
Thanks, Devina, for that one. Well, NMDC reported a disappointing show for FY19. Just today before, it reported a 10% drop coming in on the yearly numbers that you can see here for FY19, which is the lowest that we have in terms of growth since FY9, where the growth, FY10, where the growth was down by as much as 15% odd. Three factors explain this drop. One is the suspension of the Malai mine as a whole, which contributes to 17% of your overall production. Second, we also have seen excessive dump coming in from Odisha private miners, which are ramping up their production ahead of the lease expiry in 2020, and also dwindling exports. Now, exports have fallen to a low that we've seen at least in FY16. These are three factors which are bearing down on the sales volume performance of NMDC. Having said that, Bloomberg consensus analysts have quite a bullish rating on the counter. 12 out of 19 analysts that have been tracking this counter suggest a potential upside of more than 17% for this counter. Having said that, in the span of 1 year, the buy rating on this counter has increased from 30% to more than 16% right now. Back to you guys.
Well, thanks a lot for that, Nikki. So to watch out, this is a very interesting chart of the day as well. As we speak though, the market is trading at the day's high. The Nifty Bank 0.66% higher, closing in over the 30,000 mark. So we're ending the week on a reasonably good note. The key is, despite the Nifty Bank being the best performing index, none of the banking stocks are in the top 5 or 6 gainers. Axis Bank is the only one in the top 10 incidentally. So that's a very interesting scenario. We don't have heavyweights batting, and we do not have any of the banks except Axis Bank in the top 10 list as well. Despite that, the Nifty Bank is doing really well. What is the best performing stock there is GAIL. 3.88% higher, 356 and counting. Really good show put up by that one. Rahul, GAIL on the charts or GAIL fundamentally, whichever way?
I think fundamentally, I don't think so. I think GAIL is our topic and entire thing. But yes, on the charts, if I look at it, I think good built up with the volumes. So looks like that another some 3-4% more from here. So maybe I think 370 or so odd levels looks like convincing in GAIL from current levels, and the support or maybe one could take a stop losses at around 348 levels or so.
Something's up in grain industries as well, 17.5% now, 129 and counting is the top performer on the Nifty 500. Really strong show put up by this one. Gati is the other one, which is about 10% now. And as we spoke about, TV18 as a stock is done well, 9.35% higher. We've spoken about rain industries already, Amar Singh. Gati, TV18, actually even Network 18 is up 5.5%. Any of these names?
Yeah, I would say looking at Gati, what I see is that the stock corrected from almost 94 levels to 78, and today has been a very sharp up move for the stock. And technically, I would say that The stock continues to consolidate on the downside, 78.80. That's the level of resistance for the stock, and on the upside again 90.92. And however, on the long-term charts, it's clearly showing that it's moving out of oversold territory. So if it consistently sustains above 90.92 levels, then it has a potential to rally towards 100 odd levels.
Okay, so watch out for these names, some strong showing by a lot of these mid-cap names. What's not done well though is Indiabulls Real Estate, 6.5% lower in the session, 111. That is the top loser on the Nifty 500. Rahul, before we let you go, Indiabulls Real Estate is one. You spoke about Godrej Properties being the other one. What about the real estate financiers? Because some of these two have come off in the session today. Diwan Housing being a principal one. So while we talk about all of these real estate names, what about the housing finance companies on the charts?
I think selectively a couple of them look attractive, obviously fundamentally also as well as in technical space. So one what we've been liking is L&T Finance. Obviously stock is trading around I think 146 or at odd level. So I think good support at the stock at 142 or so. So I think one can go long on L&T Finance with a target of 155. That's looking good. Again, interestingly, I think one should also look at Canfin Homes. Again, that stock has done quite well from the lower levels and it's cooled off a little bit. So that one can expect 5-6% from the current levels. So I think these two other stocks are what we've been liking in the housing finance space.
Okay. Leave us, Rahul, with a top idea. I mean, you gave us a couple, but if you had to initiate a closing strategy right now, what would that be?
I think ICICI Bank, I would stick to that. I think it is definitely can go to 415 or so from current levels.
Okay. We'll leave it at that. Rahul, thanks much for joining in and giving us that perspective. So that's the view from Rahul Shah of Motilal Oswal. We spoke to him about real estate. Amar Singh, just one quick thought on Indiabulls Real Estate, the top loser on the Nifty 500 currently.
Yeah, I would say that looking at the stock, the way the stock had rallied all the way from 65 levels to 125 levels yesterday. So I would say this is more or less profit booking on the downside. It does have got a very strong support coming around 105, 104 levels. So from where the stock could again bounce back. And if I look at the long-term charts, clearly show that 125, 126, that's a major level of resistance, and the stock is not going to breach that level, and that's the level from where the stock has rebounded, has corrected. So I would say that it's now more or less consolidation, 105 on the downside. Upside will definitely meet with selling pressure.
Okay, so that's the view on Indiabulls Real Estate as well. Other stocks that have gained or lost in the last 10 or 15 minutes of trade, I think just want to pull up some of those. GAIL, of course, at the larger end of the spectrum continues to do well, but at the mid-size ends, J Corp has gained quite a bit in the last few minutes. Ashok Leyland has been on a bit of a roll and continues to gain even more, and that is trading nearly at the high point of the day. And some strength for Texmac or Rail, that has just broken into the green after being in the red for a better part of the trading day. So some spikes that are coming into some of these names. Amar Singh, a question mark on Ashok Leyland. A big run the last few days. It's ending the week on a strong footing. If you were long in this one, would you carry home the longs? And between Ashok Leyland and Tata Motors, which is a better chart?
I would say looking at Ashok Leyland, I would say that the long-term trend still remains, I would say, somewhat consolidation. So higher levels around 98, 100 levels would be where profit booking will definitely come into it. Even from a short-term chart pattern perspective, that's the level where profit booking is going to step in. And earlier also the stock had corrected from 95, 96 levels. So currently it's breaching that level. So that's a positive sign. But again, I would say that 97, 98, 98 to 100 is a profit booking level. Only sustaining above the 100 mark could lead to a meaningful rally towards 110 levels. And talking about Tata Motors, if I look at Tata Motors chart, so what I see here is that Tata Motors continues to remain strong, and it has a potential to rally towards 240, 245 levels, because the current level, if it sustains above 210, 215 level, then there is a very high possibility and probability that the stock could rally towards 240, 245, because on the daily and the weekly charts, the trend remains extremely strong. On the long-term charts, it's moving from oversold territory, and it has breached its crucial resistance zone of 210, 215. sustaining above that level. The next probable target is around 240, 245.
Okay. Let's take stock of what dealing rooms are recommending in the session today as well. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, both of you. Yatin, let's start off with you first.
Good afternoon, Neeraj. ITC, and that is one stock in the FMCG basket which is doing extremely well. Remember, a few days ago we spoke about how really dealers are accumulating defensive and FMCG stocks, ITC being one of them. After the 3% move, also dealers are recommending a buy today, sell tomorrow kind of a strategy as far as ITC is concerned. Also, TVS Motors is one stock wherein dealers are expecting some further upside. Above the 500 level, dealers do expect a quick momentum to build up as far as this auto name is concerned. And in general, be it Maruti, be it TVS Motors, and the likes of other two-wheeler companies, everything is active in trade today. So watch out for this one as well. And HDFC Life, this is another stock which is on the HNI radar. HNIs are said to be buyers in trade today, and not only that, dealers expect further upside as far as this insurance name is concerned. But Darshan has a few more stocks to talk about.
Yeah, so Rain Industries probably will be the stock of the day today. It's up almost 19%. Tried to find out from a couple of dealing rooms. Some of the HNIs, they say large HNIs are very, very active in the counter. Almost 11 million, close to 1.1 crore shares have already been traded on Rain Industries. So there is heavy buying that's happening on this counter. The other counter in which dealers indicate some of the domestic mutual funds are active is Axis Bank. It's up 1.5%. So there is traction. Some of the private sector banks are doing well. And the final stock or sector in which dealers indicate that there is optimism is the pharma sector. So be it a Lupin, be it a Cipla, be it a Sun Pharma, be it some of the other pharma names. Pharma as a pack is seeing a lot of bottom fishing that's happening in trade today.
Thanks, Darshan, for joining us and talking about what dealers are saying this time around. Well, let's focus a bit on earnings as well. The fourth quarter earnings growth may rely on just one sector, says Citi Research. Which sector is that? We'll find out in this excerpt from the chat we had with the Citi team earlier today.
So, see, the earnings, I think you have to keep in mind that there is a really low base in financials last year.
Okay.
So that's the reason why you see such a big number, and which is what is helping the overall number of 44%. If you exclude financials, what we are expecting is flattish kind of earnings year over year.
Okay.
So it's largely financials driven. If you look at the other sectors, there are a lot of sectors between 8 and 13% earnings growth YOY. And then discretionary is down some 20+% YOY. So at an aggregate level, the remaining sectors are pretty much flattish. And because of the low bank in financials, the number appears very high at 44%.
So would you say that probably you expect the earnings season to be disappointing because it will be held only by financials this time around?
So again, we have put out expectations based on whatever we understand and we pick up from corporates when we meet them, etc. So I think people will be watching out for surprises, if it's higher than that or lower than that. I think what is important here is, despite this 44% expectation, the full year number is 11%.
Okay.
And if you would recall, when we started the year, this number was 24-25%. So we have seen a 14% downgrade, and which has been pretty much the story for the last 4 years, where we start with a high expectation and then there is disappointment, and which we think is the biggest challenge, and that's the reason to kind of focus on. Because what you could have is, firstly, the numbers obviously are important, but what happens to the numbers for FY20 from outlook perspective is equally important.
And I'm just wondering if that actually aids that outlook for FY20 as well. I know we're talking about Q4, but just broadly within your respective sectors and within the overall universe as well, if indeed FY19 also fails to deliver and would come in at 11-12 circa that number, that leaves us with a in a very sweet spot when it comes to delivering earnings for FY20 on percentage terms, if indeed India Inc. manages to find its mojo back.
Yeah, so I think what you said last is most important, if India Inc. manages to find its mojo back, because the same argument was there last year, the year before and the year before.
Yeah.
But last 4 years, every year we have had earnings disappointment. So there is a low base every year, and yet we have a downside surprise. So I think getting the mojo back is important. Without that, to us, and what we have written in the preview, is that the 20+% expectation for FY20 also does look optimistic when I look at it.
Within your coverage universe, what's the expected run rate, and what is it that you would watch out for in terms of commentary? What are the companies that you believe one should watch out for, or that you are watching out for?
So it's divergent in metals and cements.
Yeah,
so
let's start with metals maybe.
So on the metal space, we saw that the fourth quarter was actually one of the weaker quarters as far as steel is concerned, right? So we will see a contraction in steel prices coming through in the metal space, and therefore there will be an EBITDA per ton contraction. Having said that, where we stand on the spot, like spot realization or spot EBITDA per ton perhaps is better than where we were in the fourth quarter. So I think more than what we see in the fourth quarter, the market will be really looking for what happens to spot realizations. And that, I think the data points that are coming out from China, while they look good at the moment, generally our view is that there should be some slowdown over the next few months in the property data that comes out of China. And therefore, we're not really sure of the sustainability of where we are on the spot EBITDA per ton. So we actually continue to remain negative on the steel space.
Okay. So irrespective of what the delivery of the quarterly numbers might be, and you might not be able to comment on some of these names, but the ones that you cover and can comment on, maybe a Tata Steel, maybe some of the others, even if the number delivery is good, you would largely remain circumspect about the prospects of the companies, stock prices.
Yeah, so I mean, I don't think the numbers delivery will be good because we're expecting a correction in the steel prices in the March quarter.
Okay, fine.
The current quarter is better than the March quarter. But you're rightly saying that the market will actually look beyond where we are in the fourth quarter. Tata Steel, more specifically, I think the one number that always creates some sort of uncertainty is the European number. So, that is one number which we'll watch out for the quarter more specifically.
Are you concerned about the news coming to Tata Steel? Are you more concerned about the news flow that's coming in from overseas in terms of Tata Steel and the merger? Because, every day you keep on hearing more and more voices indicating that they are opposed to this merger. So, is that a given that this merger will happen, or are you concerned?
The one thing that we've been highlighting for a while is that we are concerned on the timelines.
Okay.
Because I think there's a large part of the investor community that's kind of working with a Tata Steel X of Tata Steel Europe, which effectively makes like some amount of debt, about $3 billion of debt go out of their books, right? But that basically becomes the tricky point here, because if this merger keeps getting delayed, then that $3 billion of debt continues to stay in the books till such time the merger gets delayed. So I'm not specifically concerned about the merger not going through, but the concern is on the timing and the contours, because if they have to divest some assets and if there's any change in the contours, then that uncertainty remains.
What about cement? Because we've seen multiple reports come out in terms of price hike. The southern markets especially took much more price hike. There was some rollback, but then, again, the momentum. Do you think this time around cement will have a decent quarter?
Absolutely. So, first talking about the fourth quarter. In the fourth quarter, I think that the bulk of the price increases came largely in the southern markets. So the players that are exposed to South India should benefit the most. But as we move past March, I mean, we've seen in the month of April that price hikes have basically come through across all regions, and the news flow keeps continuing. Week after week, the increments are different. So despite the rollbacks, I think the extent of the increase has been pretty decent. So where we are today, perhaps versus like February, we've seen almost maybe anywhere between 20 to 40 rupees a bag in the non-southern markets, and in the south, it's between 50 to 70 rupees a bag, which is a pretty big delta. Additionally, I think the fourth quarter will also see some cost benefits coming in. So there should be reduction coming through in the petcoke costs, and some companies that haven't got the full benefit of the axle load increase, they will see some decline in the freight costs potentially. And I guess the companies keep continuing working on their efficiency parameters. So all in all, the March quarter should actually be good for cement. We will see an EBITDA per ton expansion, and as we sit like on spot, that EBITDA per ton should be even better than where we exit the March quarter.
So potential positive surprise from Ultratech.
Yes, so the thing over there is it's, because Ultratech is spread across India, and we do know about price hikes across various regions. I do believe that the price increases the blended price increase may just be a little bit better than what we've kind of forecasted. Second is that, as they ramp up on the capacities that they've acquired, the efficiency gains could maybe be better than what we anticipate.
Okay, there is a bit of a pop on Adani Power. That's up about 4.5%, and a large portion of the gain happening in the last 15 minutes of trade. So something's brewing. I think some news flow is out, but we'll just wait for the news to just get on the screen and then try and take stock of it. Okay, we do have it on the screen. The government of Gujarat has decided to accept all recommendations of the high-powered committee. I believe that is the news that has come in. Now, I would presume this would be with regards to the higher tariffs that these companies were seeking. Remember, Supreme Court had directed the Federal Electricity Regulator to decide in end of October of approving the revised tariffs for 3 power producers in the western state of in Gujarat due to the increased cost of imported coal. This seems to be around those lines. Let's just wait and see what the order says further. But if this is indeed on those lines, then this is a big relief for Adani Power. I wonder what Tata Power is up to, because I would presume that the order will not just come for one company and not come for the others. The cases were similar. Tata Power right now has not reacted too much, just a flash uptick and then come off. But let's wait and watch for further recommendations before passing any judgments on this one. Prima facie, that seems to be positive for Adani, but let's wait and watch what happens there. Stock cooling off a little bit. It's had a bit of a run in the last few days as well, but that notwithstanding, this should be a big relief for Adani Power. If indeed this turns out to be true, and all conditions accepted, if that is indeed the case, then that's a big shot in the arm for almost all of these companies, and Adani Power in particular.
This would also mean implementing a more cost-reflective tariff, which would mirror any increase or decrease in the input cost, which was what the issue was, that it was not properly reflective in terms of the kind of tariffs that they were asking for. Like you said, I mean, this is just like one statement that we've got. Only Adani Power has reacted. There's been a flash on the pan move for Tata Power, but you know, we don't have a fundamental guess, but just to get in our technical guess, Rahul, if you have a comment on either an Adani, Amar, if you have a comment on either Adani Power or Tata Power.
Yeah, I would say that technically the stock has breached its earlier resistance that was on 12th March of 53.25. And this is a spike. We'll have to watch out whether this sustains or not, because breaching out of this level, staying above 52, 53 levels could mean that the stock has a very high potential of rallying towards 58, its high that it had made in the last quarter of December. So the stock has potential. Technically, I would say the stock continues to remain strong and firm across various time frames.
So, yeah, Adani Power, 2 PPAs, I believe, with the government of Gujarat, and I reckon 1,000 megawatts each, and therefore if this is true, then there's a big shot in the arm. Wait and watch. This should augur well for Adani Power, maybe going ahead as well. But as I said, since we don't have the whole order right now and only one flash line, let's not react on this too much. It is, of course, very important, but let's just hold on to our horses and then try and figure out what could this be. But this is certainly very important. Okay, while we wait for more clarity to come in, and we will be on top of this in just moments from now, but there is a larger market beyond Adani Power, which is also just coming to a close few minutes before we also, and a couple of hours before we also see from the large IT companies. So Amar, one very quick word, any top closing strategy from your end?
I would say yes, one can look at ITC, because the way ITC has breached its crucial resistance zone of 303 level and currently trading around 306.5, and technically it's quite strong on the intermediate term trend and even the long term trend, and the short term trend, it had bounced back from the oversold territory, and it was consolidating for almost I would say since the second week of March, and breaching out of that level clearly shows that there is more to come on this stock. So this is one stock one can definitely look at buying. So any pullback towards 305 levels, 304 levels can be used as a buying opportunity, and the upside target could be somewhere in the 323 levels, whereas on the downside the stop loss needs to be below 297.
Okay, stay on. Amar, we'll just take in closing thoughts from you, but let's start wrapping up the markets. 1/3 of a percent in the green for almost all the 3 key benchmark indices. The mid caps and the small caps haven't done too badly either, considering how we started off. I think we are ending very well, particularly for the small caps space, so not bad going. I'll make it quick because we are very close to market close, but here's how the large caps are doing. Devina will speak about the mid caps and the small caps. GAIL, top gainer, ITC 3.5, Maruti about a couple of percentage points as well. Some gains for Z Entertainment and Adani Ports. There's gains for Eicher Motors, gains for Hero MotoCorp. So autos certainly have bounced back in the session today. What about the losers? Well, Indiabulls Housing Finance 2% lower, IOC about 1.5%, L&T about 1.5%, Bajaj Finance 1% lower, and stocks like Hindalco and Bharti Airtel too have faced the brunt of selling. Not too dramatic a loss, but in the red nevertheless. However, autos by and large seem to have had a good day. But if this is the picture in the large caps, what about the mid caps and the small caps? Devina, how are stocks looking?
Well, not all that bad considering the last 40 minutes of a move that has come in has improved the sentiment even in the broader market space. I'm going to quickly look at, we've got 30 seconds left to go, so a few big movers on the broader market space. First one being Rain Industries. A big pop coming into the stock in today's session, went all the way up till 20% upper circuit, and the move graduated from almost 230 onwards. PC Jewelers, big moves coming in there today. You've got Gati that's doing well. SpiceJet, they're looking to take about 16 airlines into their fleet. The stock doing well on that news. It's up about 9%. TV18 does well. You've got Suzlon, Dilip Bilkon, Essel Propack, repayment of an intercorporate deposit that's come 96 odd crores, and the stock's doing well on that count. Losers, Indiabulls Real Estate. You have Edelweiss that suffers a loss in today's session, closer to 4% under. Arcom, Divan Housing Finance, and CG Power are some of the other losers, bigger losers in trade today. Tata Power, we spoke about that one, a brief move that came about on the back of this news, the CRC order on Adani, but there's nothing much that has happened on Tata Power. It came back right back down. So flattish close for Tata Power. Adani Power, though, probably closing the day with gains of 4.5%.
No, I'll be really surprised that it's come for Adani and will not come for Tata Power. So, I mean, if that happens, I'll be really surprised. So let's wait and watch. We'll get some more clarity. Maybe the first batch of order has come in and that was for Adani Power. Tata Power's order might come in later on. Because
and this will really spruce up capacities that were lying idle the last time that the Supreme Court rejected tariff hikes. This would actually help some of these units to come and ramp up to full capacity.
Yeah, that too. But just the fact that if they would have ramped up at the earlier tariffs, they were saying that they would have made losses. Yeah. The fact that now this happens would be a shot in the arm for these companies for sure. This was arguably the biggest thing that everybody was watching out for. There's also some talk of a Pune-based NGO which might take up against this order because this is not, according to them, in the best interest. But all of these hearsay, we do not know what will happen. But prima facie, this news, very big positive. Yeah. Let's wait and watch. We'll actually try and get in Devin Choksi or one of the other experts as well to talk about this.
And I think Yatin has read through the order, so he'll have a better color on
at some point of time as he has too. But prima facie, this should be positive. Adani Power ending about 5.5% higher in trade. So this is turning out to be really impressive for Adani Power as well. So let's wait and watch what happens here. Arguably the most important piece of news. We'll try and get some reactions, but while we wait for that, quickly wrap up the markets also for you.
For the week as well.
For the week as well. So this is the weekly performance. Wipro doing very well. Autos have come back. We've had 4 auto names like Mahindra & Mahindra, Maruti, Tata Motors, Bajaj Auto. So autos have had a fabulous move in the week gone by.
Now, what's not done all that well are some of the banks there. HDFC Bank has not done a whole lot much. Metal counters, all of them in the red. So Hindalco, JSW Steel, Tata Steel, all of them losing out. And Bharti Airtel loses about 3.5%. Indiabulls Housing Finance saw a big knock of 8.5%.
Okay, the broader markets will also come up on your screen. And interesting moves, Devina. Real estate.
Yeah, Oberoi Realty 9% higher. I'm surprised you're not seeing a Godrej Properties. I believe because the last 2 or 3 days you've actually seen some profit taking on a Godrej Properties. TVS Motors does okay for itself. Amongst the bigger losers include a PNB Housing Finance in tow with what Indiabulls Housing Finance has been doing. Edelweiss has suffered about 7.5% this week.
Yeah, and the volumes in today's session, Devina, now that we've discussed what the mid caps and I think small caps would also have done today, good going, but the volumes in today's session, what we were talking about, really subpar compared to what we've seen all the last few days.
Yeah, it's been an average of 30,000 for some time now, so that's definitely below average. And even on the futures and options space, you would have anticipated somewhere closer to 6.5, 7. That didn't show, so about 5.7 is what you've got for today.
Yeah, okay. So that's, of course, today's session. And I repeat, we'll just get in, hopefully try and get in somebody who can give us some equity perspective on what this means for the two companies, which is Adani Power and Tata Power. But while we wait for that, a quick closing perspective from Amar Singh of what to expect next week. It's a truncated week. Amar, what would your trading stance be?
I would say that I would be slightly cautious, though, in spite of the trend being positive. For the simple reason is that on the daily charts, technically we are seeing some sort of consolidation and some loss of momentum. And also the all-time highs which Nifty's made of 11,761, so almost 100 points lower from the current levels. So clearly that's going to act as a resistance. And also if you look at it technically, that's In Japanese candlesticks pattern, that's a doji formation on a weekly chart. So that reflects, and also that's a double top formation, because the same level somewhere was reached in August 2018. So 11,760. So it becomes a double top with a doji formation on weekly charts, clearly implying that higher levels will be met with selling pressure, and profit booking would also set in. And only a sustained break above those levels and consistent break only would mean a further rally in the short term. As far as Bank Nifty is concerned, Bank Nifty continues to remain strong, but again on the upside.
Amar, I'm sorry.
30,300. Yeah.
Amar, I'll have to come in out here because of this breaking news, but we got your view. Thank you so much for that, and thanks for joining in, Amar, today. But out of time completely, let's just quickly get in a perspective on this piece of news as well. Deven Choksi joins us on the phone line to talk about these benefits of the higher tariff order for Adani Power. Deven, good having you. Thanks for joining in. How big a relief would this be for Adani? As of now, we only know about the order on Adani. Any order on Tata Power, if at all it's come about, is still awaited.
Yeah, Neeraj, good afternoon. Well, I think certainly it's a very powerful and very positive decision which has come out, actually speaking. It's definitely a delayed justice coming up. Frankly, I think this could have happened, I think, much earlier. But whatever has happened, but in the fact, I think this is, I think, a much better one, I think, which has come up. I really don't have the data at this point of time in front of me as to what is the increase in the tariff that they would get and how much it would have an impact onto the bottom line of the company, etc. So that is something which we'll have to wait for it, I think, till the time it gets out, and probably I think we can calculate backward. But on the face of it, I think as a directional call, if I have to put across, this has come as a bigger relief, and I think one which was expected much earlier but has come out. So I think I am really positive. My sense is that I think it is going to be for both the companies, Adani Power as well as Tata Power. Both the companies would get the relief on the tariff front. That is what my sense is.
Okay. So lots of news flow is government, of course, one that the government has decided to accept all of the recommendations. Devin, just stay on, I'll read out a couple of these lines. The fixed costs at 20 paise per kilowatt per hour to be reduced to the extent of availability of 80%. That is one flash. And the procurers have the option of extending the PPS for 10 years post the 25-year timeline as well. Devin?
Yeah, Neeraj, I was listening to it. Honestly, I think this is something which we require to calculate. And I was just noting down while we were talking.
But
I guess, yeah.
No, Devin, so just working with an assumption that the demands would have been accepted in the way the case was filed. Let's work with that hypothesis. Is this a really big positive and some of it is being priced in, or would you believe that the street is still being a bit circumspect and the impact on the earnings could be material if all the demands that were laid out would have been accepted?
So I think on the second question of, I think, the pricing in, I don't think so, because I think what I'm reading is in front of me is that the review of this particular tariff ceiling, I think, would be done every 5 years. Though I don't know, I think, how much sense it makes in this kind of a volatile world, I think. But according to me, I think there is some hope on that front as well. I think the Munra unit is basically, I think, 2000 megawatt unit, I think, which is basically impacted. So that part, I think, is requiring to see higher amount of tariff, and that is now basically available to them. So that should be seen as a positive. But as I said, I think let us get the data out probably to work out the back-end part of the calculation as to how much it can make impact into the PLN. And I think, see, they've written off part of their assets earlier. So I think this should be, I think, a P&L effect as I see it. So let us see how exactly it will happen going forward.
Okay, Devina, I think from what Yatin is telling us, and Devin, this might be interesting, but for the Adani Power, the order has come out because there was only the Gujarat state, which was the consent of which had to be taken. In the case of Tata Power, probably a few other states, the consent of which need to be taken. And therefore, that order has not come out as yet. And therefore, we only have the order on Adani Power and not Tata Power. So that probably answers the other piece of the question, Devina. But a couple of other things. Adani Power shall increase the availability up to 90% without the state electricity board paying capacity charge. And the state electricity boards may tie up the untied capacity of 550 megawatt available with Adani Power, something that you were mentioning, that some capacities lying unutilized will now start to get utilized.
Adani's plant actually ran at 44.3% capacity for the first half of the fiscal year that began on the 1st of April. So how much more, does it go up to? And this is whether it is a big shot in the arm. Nonetheless, it is a big shot in the arm for Adani Power. But Devin, with regards to this being a big kicker in terms of an upside on the stock?
Devina, I would think that the stock has probably moved up in anticipation of this particular judgment. And according to me, I think for the timing it is priced in. Though I do not rule out the possibility of, some amount of heads up on this particular stock going forward once the news is out and some calculation is made available. I do not rule out that possibility. So yes, but at least the overhang and the stock is out, and I think the negative impact on the stock price probably should be seen as a matter of past now.
Okay, we'll leave it at that. Devin, many thanks for joining in, and of course wishing you a very happy birthday.
Thank you, Neeraj. Thank you so much.
All right, with that, it's a wrap on this edition of Countdown. From Devina and me and the team that put this show together, thank you so much for watching. Up ahead is the market wrap with Agam, so do stay tuned to that.